lost. Yeah, I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year.
Morning, everybody. Happy Friday. You know what that means. It's Crypto Friday. Woot woot. That's right. We got the charts. We got the juice on Bitcoin today. It's very fortunate that today is Friday, that we have Crypto Fridays, because we got to talk about this price action in Bitcoin here. Just over the last day or two, we were talking about how quiet it's been. It's been too quiet. Well, not for long. Not for long. All right, so we got the Bitcoin charts. Let's see. Christian Tharp is our guest today. He'll be on in about 20 or so minutes. We'll have Kimmy Sokoloff. We'll have Ian Culley here to talk about bonds. So a lot going on. What's up, everyone in the chat? Good morning. Hope you all having a great Friday. I've been awake for like 4 hours already, so I'm hyped up. Let's roll.
All right. Happy Friday. I don't want to kind of steal the recess here at the end, but I got to tell you, I'm pretty excited about my Thule.
You're stealing your own recess.
Look. See how I got my Grateful Dad shirt on? Dude, this is like the first time I feel like where I'm like such a dad, because I definitely should not be this excited about a plastic box for the roof of my car, right? Like it's not that exciting. But I am it's like a whole new world for me. You should see, there's so much room in it. I can lay in it if I want to. This thing is huge. Very exciting.
JC's ultimate dad moment is buying a Thule that he couldn't install. I'm taking it back to the store to have them install it for him.
Free installation, I might add. Just throwing that out there. I was like, yo, how much do I owe you? He's like, no, it's taken care of. It's all good. I was like, I better get the hell out of here before he changes his mind.
And you buy these things at a specialty store, you said?
I bought it at Rack Attack, King of Prussia.
Got it. We know what mall by now.
It's not in the mall. It's like by the mall.
All right.
King of Prussia. The history of the King of Prussia is legendary. It was one of the fastest growing cities in North America 300 years ago.
All right. Today we all learned. Okay.
Look it up on Wikipedia. It's actually pretty fascinating.
Should we do some crypto charts? Crypto Friday?
I think we should do some crypto charts. Can we do a little state of the markets first before the Crypto Friday? Can we do a quick state of the markets?
Oh, yeah. We can do that. All right.
I mean, that's okay with you.
That would be lovely. Let's go.
Stick to the old schedule. All right, well, it's Crypto Friday, and we certainly have a lot to talk about. But let's talk about the market environment that we're in first. Throw up that first slide there, Strazza. What are you thinking here? Looks a lot different than it did in the first half of the year, don't it?
I see that you have the volatility index in here now.
Yeah, notice how it's going from the lower left to the upper right, as opposed to what it was doing before. Remember?
And look, energy's still the leader, but they haven't been spared in this selling pressure over the past few weeks, really, right?
I think they've held in pretty well. No,
they've held in a lot better than most. But I mean, a couple days earlier this week wasn't so good. Bounced back.
Had a couple of days of selling, but still hanging in there pretty well, right? Crude oil, the stocks have held in better than crude oil, right?
Yeah, crude oil fails for now.
And some of these coal stocks continue to act really well, also.
Some of the best looking charts in the market right now.
Yep, a little bit of reversal candles yesterday. One day does not make a trend, so we'll keep an eye on that. But interesting how well they've held on. And then the other thing that I didn't add here, which is my bad, I probably should have included it, is really the strength of the U.S. dollar, right? And isn't that the story here? Isn't that the story?
You need the dollar in there too. You're right.
I know, and that's my bad here. The beauty of live video is that we could just add it here. Slide 2 is the United States dollar strengthening with the S&P 500 and stocks in general under pressure.
Hey, nice haircut.
Oh, you like it? I thought it
Yeah.
was a little too short.
No, it's good. It's summertime.
You think it's good? All right.
Hmm.
My wife was like, "Hey, it's time for a haircut." I was like, "All right.
She
Well,
just
I
gives
guess
you
that
the
means I'm getting
hardest
a
time,
haircut."
doesn't
What's
she?
that?
She just gives you the hardest time, doesn't she?
I don't understand. I'm like all excited about my Thule. She's like, "It's not that big." I'm like, "Are you kidding me? It's a double XL. They don't make them bigger. It's not that big." Jesus.
She likes to mess with you.
Jesus. So, nevertheless, um, here we're looking at the US dollar index. It's had such a strong negative correlation with equities. You could really see how when the dollar peaked at the end of September last year, early October, the S&P 500 was already bottoming out at that point. A lot of the internals had already improved, but at the index level, things really got going in the fourth quarter last year once the dollar officially peaked. And with the dollar under pressure over the first couple of quarters this year, the NASDAQ got off to its best first half of the year in history. So now that the dollar, if you actually want to go to the next chart here, so you could really see the dollar strength and how that, not that one, the next chart. This is going to be chart number 3. The Freeport chart would be chart number 4. So chart number 3 will be the dollar index failing to hold that breakdown. You see how it made that new low, quickly recovered, and coming into the back half of the year, we're thinking, okay, what's gonna bring this market down? What's gonna bring in the selling pressure into the market? Well, here you go. This is what got us here: the weaker dollar. So what's gonna put pressure on stocks? A stronger dollar. Now the question is it the stronger dollar that's putting pressure on stocks, or is it the fact that stocks are under pressure and money's flowing into the only safe haven that we have in this planet, apparently, which is the United States dollar, is flowing in there? And what's interesting, Strazza, we have not seen much or any rotation at all into the consumer staples and low volatility and other traditional defensive areas. We are seeing it in the dollar, though. So maybe those areas, maybe we shouldn't necessarily overthink that, and just this further reiterates that the only safe haven out there is the United States dollar.
I think staples are actually, believe it or not, one of the better performers in the back half of the year since mid-July or something.
Yeah, fine, but look at it compared to the S&P 500.
No,
It's
you're
really
right.
at the same level it was 2 months ago, or
No,
two
you're
and a
right.
half months ago.
Hey,
You know,
bonds too. None of these safety trades work.
it's only the dollar. That's it. It's not
Those-
bonds, obviously.
We've seen this
It's
before at this point, right? Wasn't it the same last cycle?
It was in 22. It was right. It wasn't bonds. Japanese yen sucks.
Yep.
Gold sucks.
Yep.
The only thing that doesn't suck when stocks are under pressure is the United States dollar, and that could change. Could change today. Could change tomorrow. Could change next week, but it hasn't yet. It really only is the dollar. So the strategies that were working in the first half are really not working in the second half. The strategies that were not working in the first half are working really well in the second half. Why don't we look at what the trade that we put on, because now volatility is inching higher. So we can take advantage of that volatility inching higher and collect income. We weren't able to do that in the first half of the year, right? We had to do other things. We were buying volatility, actually. We were able to, things that we were long, we were able to buy calls way out into the future because volatility was so cheap. We were not getting paid to play. In other words, we were not getting paid to sell premium. Now we are. So take what the market gives you, right? And adapt to the market environment. I think a big mistake that a lot of investors make is that they have their strategy. This is what I do. And they force that strategy upon the market, regardless of what the market is doing. And that's just a great way to get steamrolled, right? So, like, if we're incorporating our low volatility strategies in a high volatility environment, we're going to get slaughtered. If we're shorting stocks in a raging bull market, we're going to get slaughtered, right? Now, if we're incorporating low volatility bull market strategies in a high volatility messy environment, we're going to get killed, right? So what we're doing is we're incorporating high volatility strategies and looking for the biggest. If the market's a mess, which it should be in this part of the cycle, and it is, so it's perfectly normal. So if the market is a mess, and it is, then let's look for the messiest stock that we could find with the highest volatility and sell those, right? And that's Freeport McMoran, right? There's others out there, but this was just a good example. Big wide range between 35 and 45. Price is right smack dab in the middle there. So what we did, very simply, we just sold short to strangle. So that means we sold the 45 calls in October and also sold the 35 puts, right? Very simple. sold the upside calls, sold the downside puts, and collect the income. $1.80. When we could buy this spread back for 90 cents, in other words, half of what we sold it for, we'll go ahead and cover that trade. So in other words, if you sell this strangle, collect 100 grand, right? When you can buy that strangle back for approximately half that, 50 grand, you buy it back, trade is over, you keep the 50 grand for yourself in profits, right? That's it. Very simple. Now the risk management, if at any point the price of Freeport McMoran closes above 45 or below 35, and those are the strikes that we sold, then we unwind the trade and we take the loss, which most likely will be a small loss. Might even be a profit, depending on what the market is doing. But nevertheless, we unwind the trade at that point. So very, very easy risk management procedures. Someone who might be new to options might be like, oh my God, selling strangles. You got to put on 2 trades. That sounds crazy. Well, it's actually very simple. Really, really, really simple. So buying the upside calls, 45 in October for Freeport, selling the 45 calls in October, and selling the 35 puts in October for Freeport McMoran, collecting $1.80. I like this trade a lot. So that's generally the state of the markets, just from a seasonality standpoint. Do we have the seasonal chart? Do we have it handy there, Spencer? So we could just kind of further reiterate that this time of the cycle is supposed to be a mess, and it is. Do we have that? Do we have that chart handy?
Yeah, I'm digging to find it. Give me a second.
I'll get it for you.
I got to scroll like all the way down.
Seems to me as though we might be re-entering an environment where those are the best options trades. Is betting on sideways.
Well, yeah. I mean, that literally is what we did 2 days ago.
No,
right?
I know it is, but I don't think.
Or yesterday.
I don't think we've showed up to an analyst meeting in a long time with that as our goal or strategy.
Yeah, that's right. No, I'll give you that.
We've been saying, what are the strongest stocks? What's breaking out? Now, all of a sudden, after the selling pressure of the last few weeks, we're sitting here saying, what's the best sideways?
Can you throw up that chart? Yeah, and it's less about the selling pressure in equities and more about volatility is now higher. Right? So even though we started...
charts are messier, they'll due to the selling pressure. Right? There's more sideways opportunities.
For sure. But it's more the volatility that we're actually getting paid to do it now. So even though in July, at the end of July, we were, selling our crypto stocks and we were kind of just taking money off the table, things started getting a little bit weird. While we were doing that, we weren't selling premium yet because volatility hadn't risen yet. So even though we were getting more defensive, there was no trade in terms of selling volatility. Now there is because there's actually volatility. Can you throw the seasonal chart there one more time so you can see that from a seasonality perspective? I don't remember a cycle throughout my career where the seasonals have tracked so closely with reality. I mean, the post-election year behaved to a T, tick for tick, with what is seasonally supposed to be. Again, in the midterm year, very similar. Saw the stocks, the S&P 500 picking up after the midterm elections. Classic. First 2 quarters of the pre-election year this year, stocks did great, as they're supposed to. And now stocks are supposed to struggle. And they are, right? So it's all perfectly normal. So when it comes to seasonality, I'm more interested in when the market does not respect those seasonal trends and actually does something different. So the fact that the market continues to do exactly what it's supposed to do is nothing unusual. Nobody should be surprised. And it's really not that big of a deal. So we just move on. The bigger deal would be if the market was not respecting those trends. If the market in the first 2 quarters of this year would have been struggling, that would have been very weird. That would have been very unusual. And that would have been eye-catching. But the stock market did great in the first 2 quarters of this year, as it was supposed to. So it's not a big deal. Just like now, if the market was strong in this environment, that would be really unusual. That would be really weird. The fact that the market's a mess is perfectly normal. So there's nothing to see here. Move on, right? So that's how we see seasonality. Further weakness over the next couple of months makes sense. Strength into the end of the year, November, December, January. If we don't see that strength in that period, that would be weird, right? That would be unusual. That would catch my attention and would suggest that perhaps we should expect more weakness in the back half in next year, right? So we'll cross that bridge when we get to it. But all we're seeing right now is just perfectly normal market behavior. So with that being said, Mr. Spencer Israel, why don't you hit the old Crypto Friday bumper?
I got some charts I could talk about. We gonna do Crypto Friday?
Yeah, hit it. All right, listen, Crypto Friday, a lot of action yesterday. My understanding, so what happened? So at the same time, you had the Ethereum futures ETF approved, but then SpaceX and Tesla and Elon Musk sold like, I don't know how many bajillion dollars worth of Bitcoin. Do I have that right?
An Ethereum futures ETF did not get approved. There was a report that the SEC is like willing to approve it, or at least not going to stop it from happening, right? But it that's all that happened. There was no like formal decision. However, crypto ETF watchers have their eyes on today for a potential decision on a maybe grayscale ETF conversion ? So I don't know. There could be more coming down the line. But anyway, let's pull up. Speaking of seasonality, we have this Bitcoin seasonality chart that I thought was really good. Whoever made this.
Well, this is just August, kind of showing you that things are supposed to do pretty well in the first half of August. They did not, and they're supposed to struggle in the back half of August. So far, they are. So they were weak when they were supposed to be strong, and they are weaker when they're supposed to be weaker. So, what does that tell you about the current environment? So that I think that the seasonality helps kind of put things in perspective. But let's take a look at what really has had our attention in the crypto markets, and that's the lack of volatility. How boring it is. You know, how people are like, man, you know, cryptocurrencies are not volatile enough. I need to trade more bonds. Like
Well,
that was right, you know, right?
Hold on. This chart worked already, right? We're seeing that volatility expansion right now. This is the worst week for crypto since November, literally since we bottomed last year.
That's right. So volatility is price agnostic. Just because you get a volatility expansion doesn't mean prices need to fall or rise for that matter. It could go either way. In this case, we're seeing prices falling with that expansion and volatility. Yeah. And it's remember, like we expected a volatility expansion like any day now. Like I was literally saying, like any day now, we're going to get monster volatility because volatility mean reverts. How prices react is still to be seen. Clearly, the prices are reacting to the downside with that volatility expansion. Now, why don't you go to the Bitcoin so you can see exactly where this is happening? Failing once again at this 31,000 level. It's the anchored VWAP, the anchored volume weighted average price from the all-time highs, which is where we struggled in the first half of this year, continuing to struggle. There's nothing to talk about here from any sort of longer-term investment perspective, intermediate-term perspective, until Bitcoin is able to break out above that. There's nothing to talk about. Like laser eyes and diamond hands, all that stuff is stupid. That's for idiots.
We gotta get some.
We want to be prudent, and we want to break out above that level for us to be long. What was that, Strazza?
We need some fresh charts here.
Fresh chart. Well, yeah, this isn't updated because these are weekly charts. So the weekly chart has not completed yet. So my point is prices are substantially lower now, right? But the bottom line is we're down like towards 25, 26,000. Below 30, 31,000, there's nothing to talk about. Like between there and zero, there's literally nothing to talk about at all. Same thing with Ethereum, also struggling at key overhead supply. Take a look at the next chart there, Spencer. So right now, Ethereum sitting just under 1,700. Yeah, zoom into that one. There you go. Zoom into the Ethereum chart. Again, failing right at those levels. You got it?
I got it.
So failing once again right at those levels, there's nothing to talk about. There's nothing to talk about. Former support turning into resistance. You're seeing literally the exact same thing in Ethereum as you're seeing in Bitcoin. We start breaking out above 2,000 or so in Ethereum. You know, that's equivalent to 31,000 in Bitcoin. Both of them are below. Throw the ride and the marathon. These were our two favorite vehicles on the way up. It was actually really impressive how well these things did. Despite Bitcoin not breaking out, 16.5 continues to be a good level there. Right, 17.5 continues to be a good level. We're well below those levels. So a lot of work to do in these names before we start getting interested again. You know, to me, I don't know. Maybe these are scenarios where rather than buying a breakout, rather than, you know, paying more knowing it's on the way up, maybe these things are going to get so bad that it's a situation where we perhaps buy the dip. I'm in no rush. We'll wait for that to transpire. And go to the next chart so you can see Bitcoin and Marathon really trading tick for tick. So you could really see the marathon. It's kind of like a 3-to-1, 4-to-1 leveraged ETF on Bitcoin for all intents and purposes. It's not. It's a Bitcoin miner. It's a stock. It's not an ETF per se, but an excellent vehicle as a leveraged play on the coins itself. And we got a few more charts with Strazza. I want you to weigh in. Any thoughts on that? You want to talk about a little bit more of what transpired last night?
No. I want to talk about the charts. Go back to the Riot and Mara chart. So this was really the tell. Talked about this last week after I got into my Riot trades. I said I'll probably be stopped out by Friday, right? So lost a good amount of money on those Riot calls, but that was really the sign. When we were getting stopped out of these trades, Riot was rolling over. Bitcoin was still holding there. It took Bitcoin almost a week, but it's catching lower now. These miners aren't just great trading vehicles. They're great information. They called another move here just this week.
Yeah, but I don't know if they're great information because on the way up, the information was that Bitcoin was going to break out and it didn't. Right? Like on the way up, like in June, for example, and early July when they were ripping. Remember, they were up every single day and Bitcoin was not able to break out above 31. There was not information.
Bitcoin was right.
Bitcoin was right.
It was a false move. Yeah.
Right.
And then this rolled back over and caught
but my point is now to the downside, you're talking about how they were a leading indicator for Bitcoin itself.
They just led Bitcoin lower. They both had tight coils. The miners went first. Bitcoin followed. That's all I can tell you. I'm not back testing this and saying that they've been perfect over the past 3 years.
Yeah, listen, it was a good heads up on the way down. It was not a good heads up on the way up. They were doing their own thing. And another thing, on the way up, at first I was like, man, look how well these things are doing before Bitcoin even breaks out. Imagine how well they're going to do once Bitcoin breaks out. Bitcoin failed four weeks in a row to break out above 31,000. This was in the face of the most bullish behavior that I have ever seen, the bullish news I've ever seen in the history of Bitcoin. It was like Fidelity's in, BlackRock is in, Vanguard is in, like all the big players are all getting involved. Bitcoin couldn't break out on that. Like that was a lot of information. So listen, I think patience here is a virtue. We were talking about how can we expect Bitcoin and some of these cryptocurrencies to do well in an environment that technology is under pressure. I don't quite. It's tough. It's tough for me to buy. So I'm looking forward to talking to Ian Culley later on today's show about the bond market, because what's going to save crypto? What's going to save technology? Bonds. I think it's the only thing that can save them. Bonds.
Bonds have to catch a bid, is what you're saying. Throw up my chart. I threw it in here, Spencer. It's chart 8.
Sure.
I was looking at this yesterday, probably thinking way too much about it.
No, it's a great chart. You should be thinking about this.
So we've seen stocks and bonds move together throughout this cycle, right? And that's what you see on the left-hand side of this chart, if we ever get
tech stocks in particular.
Right, because these are both long-duration assets. This is just math, right? Why these look the same. When you get a divergence or a dislocation like we've had, so far this year in 2023, right, with stocks moving higher and bonds moving lower, it's not that the relationship is falling apart. It's just that maybe stocks are making the bet that the bond market will be wrong, right? And that rates will eventually roll over, right? And it seems like that's the environment we were in, where growth stocks were really rocking this year. And we're looking at rates moving higher, and we're thinking to ourselves, they got to be pricing in like the end to this rising rate environment, even though we're still going higher right now. I feel like the last few weeks, with growth and tech stocks getting hit the way that they have and now catching lower to bonds, it's almost like if we look at that 10-year and 30-year chart, now that the 10 and the 30 are actually resolving higher from these, almost year-long ranges, it's almost as if the stock market's looking at the bond market and saying, oh shit, they were right. Rates really are going higher. We got to fix this thing. And now you're seeing tech and growth catch lower. Am I overthinking that at all?
No, I think you're thinking about it exactly right. So I think the only thing that's going to save cryptocurrencies and technology anytime soon is a bid in bonds. And, magazine cover any day now. I could smell it, Straz. I could smell the magazine cover. It's coming.
Well, luckily for you, you see a lot of magazines come out around the weekend. So maybe on Monday.
Lucky for me.
And Spencer, before you bring on our guest, if I could just real quick, hot take about this chart, because plenty of comments on Twitter about this. If you look at this and your takeaway is, oh, wow, look, the bond market was right. we've been bearish of equities. Stocks were wrong, and they're going to catch lower. And you're taking some sort of like victory lap as a bear because the bond market is finally like giving that signal for equities. Then you're totally missing the point of what we're trying to do here, right? Because you could have made some very outsized returns in the stock market for 3 straight quarters now, as this divergence has been taking place. So if you're looking at this kind of information, like staying out of an asset class like stocks because of it, it's not really helping you that way either. You want to look at this and say, okay, this could matter eventually, right? And this gap can start to narrow eventually and start to close. And I want to keep an eye on it, but you want to follow the price action first. Stocks were moving higher, and they're moving higher at, you know, an alarming rate. And we were all making money back half of last year and earlier this year. So, you know, you want to look at these intermarket relationships and wait for them to matter and let price confirm them before acting or caring too much about them.
Good point. All right, let's bring on today's guest, Christian Tharp. He's here. Christian, you ready? He's ready.
Do it.
Let's roll.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Christian.
JC, how are you doing?
Summer, man.
Just listening to you guys.
Listen, Christian, I know, specializes in the options market, which is great. But he's a CMT. One of us. One of us.
Yes.
Right?
For
So
sure.
he's family over here, guys. For everybody who is very familiar with the study of the behavior of the markets, which we like to call technical analysis, Christian is here. But what I really like about Christian is that you're focused specifically on the options market. So I really appreciate that a lot because we do the technical analysis, and Sean comes in and helps us, you know, sort of identify opportunities and strikes and expirations and things like that, and we work together to put together options trades. Like, for example, we were selling strangles yesterday in Freeport-McMoRan, collect some income, because now with volatility, I wouldn't say it's high, but higher than what it's been, and we're collecting some income. So that's how sort of we're thinking in this environment. More income generating strategies than what we were doing in the first half, because we weren't able to generate any income. So that's how we're thinking through it. What about yourself? What's on your mind these days?
I would say, in a way, we're not too far off. The market. When you look at the market, with the exception of the past couple of days, it was definitely this wrestling match back and forth. Rallies not being able to be held, but then again, bears not being able to hold things down up until the past 3 days. So recognizing that environment, we are very much in the services I operate, very much we swing for these winners, just calls, just puts. But when the environment is right, we do strangles as well, sometimes straight up for volatility. Like, so if we think something's just going to have a wild move, but we're indecisive, or what we've been doing lately in this environment is simply mostly being on the downside with just hedging ourselves just in case. So what it's allowed us to do is capitalize a little bit on these little pops that we get, while still, like, for example, we're short Tesla coming into today in one of my...
Short by being long puts or short the equity?
Long puts. So we have 2 sets of puts. We have the 222.50s coming in today and the 220s coming in today. But we also put a little hedge up there because, again, the environment has been pop sometimes in the morning, but we also think that we're getting dangerously close to the need for some sort of a rally here. And we thought there was a good shot that the markets might be ready to spill. We need that nice, good vomit, so to speak. And we like 4,300-ish, 14 on the S&P, 14.5-ish on the 100. The Dow was in a zone where, it's right where it should hold up. So we wanted to hedge ourselves in case. So we've been doing a lot of that, mostly on the put
Hold on,
side.
can you back that up a little bit? 14 on what specifically?
14.5 on the NDX, on the 100.
Okay, got it. Yep.
Yeah. As you probably, I'm sure, are full aware, but maybe your audience may or may not be, it's not uncommon, right, for that 10% barrier, to be psychologically important, as if the market is saying, hey, I don't want to go into a technical correction. Not uncommon, right? So if you look at the 100 there, it's getting close in that area, and there's also price history in that area. 4,300, a meaningful level, just going back for a while. So we wanted to prepare ourselves in case we did drop this morning, and then, boom, we got a little pop. These little hedges could pay off. So kind of doing what you've been doing, taking advantage of the environment, that has kind of come to us over the last month.
Can you talk a little bit? Listen, I've been doing this over 20 years. I talk to a lot of investors of some of the most experienced and high net worth investors in the world, big portfolio managers that manage billions, and individual investors that might be a little bit more new to the market, perhaps seasoned individual investors. And regardless of experience or AUM, I still see the same mistakes of not adapting the strategy to the environment and instead forcing the same strategy upon the market, regardless of what the market is doing. Like, do you notice the same thing talking to investors, that that's like a big mistake people make?
Oh, for sure. Oh, for sure. I think that there's a lot of that digging in the heels. And I think a lot of, social media and kind of, the world we live in now, we get served what it is we're clicking, right? So if you're bullish right now and you're clicking bullish things, you're going to get bullish articles, and you should follow these bullish, and the same thing on the bearish side. And I think what happens is we don't adapt quickly enough. And that's what I love about technical analysis and, being a CMT and teaching others, is that, look, the market is always right. You can't argue with it. You trade.
I try to say that. People get mad at me when I say that. Like, oh, the market's wrong. It's like, all right, bro. The market's wrong.
I always say it doesn't put more money in your account, right? You can argue with it all you want, and maybe you think the market's, wrong, but at the end of the day, the price did what it did. And a lot of times the market and or stocks give us those heads ups. It's like, so for example, one of the charts I brought today, you were talking about bonds earlier.
Put it up. Throw up the bond chart.
Yeah, the TLT. If you throw that one up there, just as just as an example, some think bonds overdone, some think, oh my gosh, right. So we get these camps. At the end of the day, what I look at is I see, and to my students, I always keep it as simple as possible. Look, those little pink lines, the market is telling me those two pink horizontal lines matter. If we break through that one up top, probably going higher. If we break through right, keeping it as simple as possible, you break lower, right? So we have an ETF option service where we just bought some simple puts, closed it out yesterday for 250% as we got closer and closer to those 52-week lows. So my thing with everyone is like, look, it's okay to hold an opinion or a view or a bias or a fundamental belief, but at the end of the day, I'm not going to argue with what the TLT or the market just told me. So same thing if you compare it to the XLU right now, which I think is the other chart right after this. Same thing. We just went short on this, bought puts, long puts, and I apologize I didn't highlight those red lines, but if you look at that red line, look, XLU, the market loves 64. It loves 64. Oops, it stopped loving 64, right? Some of you, supply demand zones, whatever you want to refer at, the bottom line is I encourage my students not to argue with the market, and when the environment changed, maybe you thought utilities were going to break higher. When the market tells you something otherwise, or as I like to say, the market reserves the right to change its mind. Maybe it was telling you bullish things, but the minute that environment changes, I agree with you completely. You have to adapt. That's why I love about technical analysis too.
This is something I learned from Jeff DeGraff a long time ago. That before doing anything at all, first identify what kind of market environment we're in, right? What's the market doing? And my interpretation of the current market environment is that during a seasonally weak period, stocks are weak, coming off a very strong market environment during a very strong seasonal period. So we're in a weak seasonal period. A lot of the major indexes and a lot of the largest weightings in those indexes are stuck below overhead supply, right? And volatility is higher.
Yep.
So all these things I just said are very different than where we were 6 months ago.
Sure.
Right. So why would I incorporate the same strategies that we were doing 6 months ago today? We're doing very different types of strategies, right?
Oh,
clearly
for sure.
You are as well. Strazza doesn't like it when I steal all the questions from the guests. Strazza tends to similar to you actually, do his technical analysis and observe markets and then execute through the options market, right? Very similar.
No, you're doing good. I mean, I think this is a good conversation. We got to be aware of downside levels here. I was just looking through some of these charts on a short-term basis, and just the character of this trend has just changed. Like, I was just looking at the consecutive down days indicator on some of these charts. ARC had its worst streak in history earlier this month in down days.
Didn't it just have like its best streak in history?
9 straight down days. We're Never done that before.
Wow.
Flagship fund.
Christian, how bad do you think things could get for this market, or do you not care and you don't think that far ahead?
I do. Now, I will say that, I tend to, I need to see something big to make bigger calls. So, for example, we were able to, I'm sure you probably were as well. I feel like the peak at the end of 2021, beginning of 22, I think, to me, it seemed like the market made it abundantly clear, technically, from a momentum standpoint, that was coming. No different than I thought the market made it abundantly clear in these big moves. Right. To me, it looked, and I know you were calling for it as well. When you look at the price low of the major indices, it seemed very captain obvious to me in October. That's what happened. Outside of that, I do like to focus in that kind of multi-week day. That's where my strength is. But I do think sometimes, for example, if you for example, pull up, I did provide a chart number 2 on the 100 here. I think this is just, I agree with you completely. I think this is a seasonal, perfect time for a market that's been on fire to take a breath. So right now, your members and your students might be doing the same as mine. Oh my gosh, we taken out last year's lows. I'm like, whoa. Well, it's okay. We're allowed to do this, right? We're allowed to do this. But I look at things like that nice, pretty little yellow channel that the 100 here was traveling in. The S&P had its channel as well. I look at that key level, that green one you see right there towards the top as being an important resistance. We broke through it. We had higher. We came down, tried to hold it. Guess what? We break it, probably falling to bottom of channel, probably breaking channel. Break channel, probably falling to pink line, right? So I just try to teach my students a level of time to help them with their swing trades, short trades, or otherwise. So when I see charts like this, S&P looking similar, this tells me that we're going to probably meet that 10% target on the NDX here. Where I start to run into struggles, like the Dow has been such a great performer and how far it would need to possibly fall. S&P, I think worst case scenario, we're talking 4150 to 4200. I think, if we keep going the way we're going, that'd be perfect 10%. 7% get you to the 4300, which I think is good. So I tend to stick in those areas, and that's where my strength is. When you start panning out, I only start chirping when the market says, hey, we've got problems in a big picture.
If you guys ever hear me say the words garden variety, can somebody just punch me in the face as hard as possible? I feel like when people say it, it's like a cry for help. Can you, Christian? I hear a rumor. Spencer, do you hear the same thing? I hear a rumor that this coming Tuesday, live in front of everybody in the whole world, for those interested in making money anyway, Christian and I are having a nice little powwow talking about what Christian is doing in this environment. And for those of you who are used to the work that Strazza and I do on a daily basis, and we've been doing for many, many years now, Christian is a beautiful complement to that, while trained in a very similar way to Strazza and I, from a technical perspective. The execution and the time frames and the strategies are actually different. I love, Christian, that we're not stepping on each other's toes. Our work, yours and ours, are very complementary to one another. So guys, click the link. Spencer, do you want to tell them what we got? We got a QR code. Who's fancy? Look at Christian with a QR code.
We got on YouTube a link in the chat and in the description. If you're not on YouTube, if you're watching us on our website or if you're watching us on Twitter, there's a QR code. If you're like, I'm on my phone, how can I scan the QR code when I'm already on my phone? It's okay. There's a link right on the bottom of the screen there. It's get.allstarcharts.com/the-profit-machine-live. It says it right there.
We should maybe make the URL longer next time, Spencer.
We can do that.
Yeah, try to make it longer. Try to make it less easy to remember.
Yeah, we can certainly. That's good feedback. We can certainly talk about that. Maybe -go-now-here. But anyway, on YouTube, in chat, in description, QR code on screen, a link on the screen. Tuesday at 4 p.m. Eastern, right? That was a question.
Tuesday, 4 p.m. Eastern time, right when the market closes, you're going to get Christian and me tag team. We're like NWO over here, red and black. No big deal. How about that? Remember that, Spencer? Did you watch wrestling when you were a kid? Did they watch wrestling in New Jersey?
Yeah, I mean, many moons ago.
All right.
I have limited recall of that. So most references go over my head. Anyway, I'm taking the QR code off.
Christian, you want to tease a little bit? What are we going to talk about on Tuesday? You want to tease it a little bit?
Yeah, first of all, I couldn't agree with you more. I love. I remember learning the word fractal when I became a CMT, and that's what's great. Is like, you see things, I see things, we see things same but different time scales and such. I look forward to just kind of you and I talking shop back and forth, and maybe coming into my house, so to speak. Where I do my best work is like throwing up a chart and almost like talking about trades while teaching at the same time, and the members and the students that have gravitated to me is, over the 16 years I've been doing this, a lot of it has to do with a unique way that I look at, like I don't try to talk over anyone. I really try to help everyone understand what they're seeing and why, and apply that to trading. So I look forward to you and I kind of going back and maybe me talking about trades and kind of how we do things in TPM in a different way than maybe a lot of your members are used to.
Yeah, no, and I appreciate your simplicity too. I like to keep it simple, stupid approach, particularly from an execution standpoint. There's nothing complicated there. I really like that a lot. So, all right. Spencer,
Ken K asked, is the event on Tuesday free? Yes, it is free for everyone.
Everybody's welcome. This is like Elon fighting Zuckerberg, but like way better.
Which one of us is the Zuck though? Is that me or is that you?
We don't fight, man. Nothing but love around here, man. No fighting.
It's like Elon Musk put it, Elon Zuckerberg, but this actually happens. So Tuesday at 4, there are the links. Check it out.
All right, Christian, you're the man. Bring him back soon, Spencer.
Alrighty, how's it going?
Thanks, guys.
So Christian and I on Tuesday are going to talk about actual individual trades. Today was a little bit more macro conversation, kind of help put things in perspective. But we're going to get down to the nitty gritty, and we're going to be making some money together. I have a funny feeling, Spencer, knowing Christian's work, and I'm going to be walking out of there with a good trade idea, and I will be putting it on Wednesday morning. Now, let's see what happens, but I have a funny feeling that's exactly what's going to occur. Right. You want to update on the markets? Dow is down 130 points here on the futures, about 40 basis points. S&P is down 50 basis points. The NASDAQ 100 futures down 80 basis points. Bonds in the green for once in their lives, up a little bit, not enough for a key reversal, but I can smell it. And I'm not long bonds. I don't have a bond position, but I can smell it stinks of a mean reversion coming. So let's see what happens. Gold and silver up again. Copper up a little bit. Dollar index flat with the euro flat. Yen up a little bit. And the volatility index up once again. Rates falling with those bonds ticking higher. So little bit of a change this morning, but the market hasn't even opened yet. So let's let them dance. See what happens. We got weekly charts at the end of the day, Strazza. Very excited for those.
Yep.
Christian Ionescu in the chat complained that we were using old charts. Just let us know which charts you thought were old, and we can update them. I don't think
we are using old charts. It's okay. We'll do better.
There was some old charts.
He doesn't need to let us know.
Okay.
Yeah, no, but I don't like using weekly chart. If we're looking at a weekly chart, I'm not going to put a half complete candlestick.
Fine. Deck's a little stale today. That's all I'm saying.
Okay. Should we bring on Kimmy? Kimmy's here.
It's not the point. It's for perspective, All
right. Hot, fresh weeklies today at 4 p.m. That's when they're fully baked. Let's bring Kimmy on here. See what she's watching today. I think she's already made a few trades.
What else is new? Kimmy, happy Friday.
Happy Friday.
For somebody who doesn't like to trade on Fridays, you're already putting on trades on Friday, huh?
Yeah, I'm just stepping in, just trying to see a little step in. We'll see. Trying to see what goes on.
The IWM?
What? IWM, just see if we get a little bounce in it or not. So far, not so much. We'll see. I'm going to see how it holds on. I'm not sure. Listen, this has been a slow bleed lower, right? Past 2 weeks. I did say yesterday if the S&P broke 4,400, we could head to 4,370. We actually closed there, dip below it, I believe. A market could stay overbought for a while, and a market could stay oversold. So we could continue to stay oversold. They want to push, could they rally this market a little bit and then push it lower into September? Of course they could. Could we see the S&P? Could we see the S&P drop down to like 4,300? Of course we can. We just have to be mindful. Everyone has to watch their positions carefully. I tell people right now, if you try to buy and step in this market, you got to keep your stops tight. Yesterday, you had a quick bounce up.
As opposed to what, Kimmy? As opposed to when? So you want to keep your stops tight in this market. In a different market, you don't want to do that?
No, you want to do it in all markets, but if you look at the intraday, because this is what I look at, is intraday movement, it's very whippy. The SPYs yesterday bounced from like 439 up to 440 to like 440.50, and then zoom headed back lower to 438 and then closed at 435, 436, where the SPYs even closed at yesterday, right? 436. I mean, it was up and down. So the volatility is a little bit more exacerbated, right, during downtrends. Like you could see even all last week, any pop in the SPYs, they slam them lower. So you have to, not saying even a trending market heading higher could be volatile, but I think sometimes in downtrends, you could get the quick slams, and they slammed that yesterday. Everyone thought like a big bounce. I said, if anyone buys here, please be careful. Please be careful. Take your money and run. Yesterday, we had a great day. We had like 4 winners, not big trades. But I said, hey, guys, if you had a good morning, walk away. Walk away.
First of all, Kimmy, you're underselling it. It was 5 winners, first of all. 2 of them actually from the long side, Valero and Goldman Sachs. So, one of the things that I really like about your strategy and the counter trend nature of it, because it's intraday, there are both longs and shorts, regardless of whether we're in a trending environment higher for the overall indexes or lower, or even sideways, like, you can argue maybe that we're in now. There's opportunities on both the long and short side on an intraday basis. So what I love about your strategy, because I put myself in a similar camp to others, to many other investors, which are a little bit longer term than in the middle of the day or in the first half an hour of the day. We're looking out days, weeks, months into the future. So a shorter term time horizon to complement longer term strategies is fantastic. In addition to that, we tend to be more trend following in nature. So on an intraday basis, being more counter trend. So you're getting shorter term and counter trend. Real diversification includes strategies that are uncorrelated to one another. And what you're doing on a day-to-day basis, Kimmy, for you, this is what you do. But for the rest of us, that this is not what we do with all of our money, it's a beautiful complement to the other things. And, that I've learned the hard way over the years, that's real diversification. Like, oh, I'm long small caps, I'm long international, I'm long large caps, I'm long the NASDAQ. That's not diversification. I'm long a bunch of stocks. Right? So time horizons, strategies that are uncorrelated with one another, that's real diversification. And you do a really good job of that. Whether that was your intention or not, which I'm pretty sure it wasn't your intention, but that's what it's become.
Well, thank you. I do have a longer term account.
She wears multiple hats, JC. Come on.
That might what?
Yeah, but that's not the service. That's not the service. Yeah,
I do have a long-term account. Like, listen, when the SSOs, which is a 2 times, right? Is it 2 times SSOs instead of the SPYs? I told everyone when I bought the SSOs, and I wrote it up like 12 points. It kept going. I can't pick the top, I can't pick the bottom, but I said, hey guys, I have this in my longer-term account. I'll let you know when I'm selling, right? I do keep positions in my longer-term account. And listen, I'd love the market to pull in more because I'll get ready to buy, and I'm going to buy in my long-term account. I'll start nibbling on stuff,
I hope it crashes and I hope the market goes to 0 for sure. 100%. But I don't get a vote in the matter.
0, but mind the S&P going down to 39.
Or lower. Listen, I'm 41 years old. The best thing that can happen for me and my family
I
is that the market gets
said this a month
destroyed.
ago. I said this a month ago. So, I said, I wouldn't mind seeing that.
Yeah, I hope it does. I hope we get a
Do I have
severe
a halo
correction.
on my head with this cat?
I think we're losing Kimmy.
Well, it's because your blinds don't close behind you, right? So there's sunlight behind you, so it makes it look a little bit weird. So maybe one day we'll have to get that. Maybe one day we'll get a new camera angle. All right, Kimmy's internet's slowing down, which means it's time for her to go to her room, the trading room, where she's there every single day. Do we
have a halo on my head?
At the open, through the open, into the trading day. She's calling out her trades, winners every single day. If you want to get in just for 2 weeks, 2 weeks complimentary, just there's the link on the screen right there. There's a link in the chat. There's a link in the description. Check it out. It's seriously, it's where I go. When I'm done here, I should be doing work, but more often than not, I end up just like hanging out, in Kimmy's room, trying to trade with her, right? Because, she's really good at this, and I'm not a day trader, but I'm learning every day. So check it out. She's there every single day. The market's open, and it's very few traders that I've ever met have a win rate like her. So there it is. Okay. And yes,
5 yesterday.
I'm aware of Kimmy's camera situation. Working on it. So, okay. I just wanted to update everyone on that. All right, 9:22 here, 8 minutes till the open. Looking at what's up and what's down today. A couple interesting things caught my eye. HE, Hawaiian Electric, they came out and said that their goal is to not have to restructure the company. So stock popped on that news this morning, though it is off its pre-market high. I think at one point it was up 20%. Yeah, and then Farfetch, FTCH, unusual. It's a low price stock now. It didn't used to be this way, but it used to be.
It is now.
It is now. It's $5. But you don't often see a stock. Well, I should say it was $5 yesterday. Now it's $2. But you don't often see a stock fall basically 50% on one earnings report. But that's what happened this morning on FTCH. So
I believe it was the lack of earnings.
That should do it, right? So those are the only two really that caught my eye this morning. Oh, Bloomin' Brands. They own Outback Steakhouse. Just caught a 9.9%. Was it activist stake or non-active or passive stake? It was a 13D from Starboard Value. So that stock is up about. Whoa, what is it up about now?
What stock?
Bloomin'. It's about 8%. Yep.
Outback Steakhouse.
Yep.
Let me tell you something. The chocolate thunder from down under. Woo! That is delicious.
Okay, Strazza, you had a chart. Well, it wasn't from you, but you wanted to talk about this chart this idea that I mentioned yesterday, which was the fact that dividend paying stocks are lagging hardcore. You want to talk about that?
Yeah.
All right. I got that right here.
So there was a tweet by Bespoke. Yeah, they put this out. Basically, what we're looking at here is stocks that don't pay dividends, give you nice returns, and the highest yielding stocks, the stocks that pay the biggest dividends, don't give you any positive returns at all. And this is only going back about a year, right? And then they have all the S&P 500 stocks all the way on the right there. Great chart. I love this. And we're going to run the numbers going back a lot further than a year because I have a feeling that this has nothing to do with the current market environment. This is simply how dividend stocks work, right? So the takeaway in their tweet was something like, why would anybody buy the highest yielding dividend stocks when bonds are offering whatever it is, 5%, right? That's because that is the narrative these days. Why buy dividend stocks? You're getting 5% in the bond market.
That's the question. Yeah.
That's not it. The highest yielding stocks never return, never have good performance. Why? It's a momentum strategy. It's not that executives are sitting in a boardroom going, hey, let's hike the dividend to 10%. They don't pick the yield. The company doesn't pick the dividend yield. They pick what the dividend payment's going to be. The market determines what that yield is. So if you have the highest yielding dividend stock, it simply means that your stock has been falling. Stock price has been falling. That's why your yield is so high. So when you're looking at the performance here of the highest yielding stocks, what you're really saying is stocks that have already been falling have lower returns than stocks that probably haven't already been falling. Does that make sense?
Yeah.
Did I explain that?
No, you did. The company only controls half of the dividend yield equation.
Dividend yield, it tells you about valuation. The market is valuing your company like trash if you have a crazy high dividend yield.
Well, it tells you about your dividend measured against your valuation, right? So
no, it is a valuation metric in and of itself. Think about it.
Is there such a thing? Would there ever be such a thing as a company that paid, I don't know, high single digit yield that, and the stock is going up? I mean, it would have to be a high dividend.
Listen, I'm sure there's an MLP out there, like one of these pipeline companies out there, or maybe some sort of crazy REIT that has intentionally made a 10% yield, right?
Yeah.
But the point is that on balance, 99% of these companies are not sitting in boardrooms saying, let's set our dividend yield to 10%. The market is setting their yield to 10% for them. They might set it to 4% or 5%, which is still exorbitantly high.
Yeah.
Right? And the market is going to go and say, this stock is crap, let's knock it down. And then it's going to have a 10% yield, right? It's going to be one of these high yielding dividend stocks. And then when you run numbers like this, again, you're simply looking at stocks that have already been falling and saying, oh, stocks that have already been falling keep falling or have lower than average returns. Of course they do. These are stocks that are in downtrends, the highest yielding stocks. You're looking at the worst stocks in the market and saying they underperform. So kind of a flawed stat, but a really important point because it's always that way. Highest yielding stocks always have the worst returns, right? It's not just because bonds are offering 5% right now. This is just how dividend stocks work, which is why
we always say. What do we always say, Strazza? That if you want to make money in dividend stocks, buying the stocks with the highest dividends is the worst way to do that. You want to be buying the stocks that keep raising their dividends every year. The fact that it's not a very high yield is as a result that the price of the stock keeps going up. That's not a bad thing.
Give me a cool 1% yield over a 5-6% yield any day. And
if it's because the price they keep raising the yield and prices keep going up too.
It usually is, but yes, of course. But like, what do you think about my point there? Like, this is a momentum strategy.
I agree.
To say that the highest dividend stocks, have lower returns, you're looking at the worst stocks. Like by definition, you're looking at stocks that have been falling in price. That's how they get those high yields. The company didn't set the yield to 10%.
A lot of people don't think of it that way, so it's important. And we reiterate this a lot. Like Strazza's tangent here, like this isn't the first time we do this. Like he's reiterating a very, very important point.
I've had practice.
Came out with a nice graphic that triggered him a little to set that off. No, but it's true.
No, Steve, I do agree with you, but maybe the reason for the other narrative is that people have treated dividend stocks like bonds for the last 15 or so years, right? They've had to. If you want income, where are you going to get it?
Yeah, that's true. Fine.
So
things are changing there. I do think, who would want some of these high yielding stocks in an environment where bonds are paying this much? I do think, yes, it's going to make it even harder for those companies to catch any sort of meaningful flows. But the larger point is simply that the highest yielding stocks always are the worst performers.
As a group.
Yeah, but we have to keep them around because there's going to come pockets of time when they're going to outperform, right? So we have to keep them around just for that reason.
Oh, let's remember, we don't necessarily keep them around.
Yeah, sure.
The market environment, because these are companies at the end of the day that there's all these other things behind. It's not just for traders. Right?
Yeah, if Verizon goes away, where am I going to get my phone? Am I going to have to switch? No, thank you.
Nobody has Verizon anymore. Bro.
I have Verizon.
I've never seen more funds and strategies around a more flawed idea than high yielding stocks.
Yeah.
I mean, there are a million different ways to invest in high yielding stocks. It's just.
By the way, Spencer, you know how Strazza and I are making our new. I don't want to let the cat out of the bag yet, but Strazza and I are coming up with a new Dow Jones Industrial Average. Yeah. And literally the first thing we're doing is kicking out Verizon, right? We're kicking out Verizon. What did we say? We're going to kick out Verizon and we're instead of Verizon, we're adding Google because Verizon is like a utility stock, but it's in communications. So we're switching it with Google, but then we're adding Nextera, the utility. So we keep the utility status there, but we're adding a real communication stock, not this Verizon bullshit. So anyway, We'll talk more about the new Dow Jones Industrial Average shortly. But Strazza and I have already been working on it behind the scenes. A lot of it, and we're agreeing way too much on this. By the way, Strazza,
it's gonna be fun.
Like all the things that all the changes we're making.
This is what I think you should do. This is what I think you should do for that. So
we're adding Schlumberger.
You guys pick 29, and we'll do a crowdsource vote on the 30th. Okay.
Bullshit.
No,
this is a dictatorship.
Absolutely.
No. But this is what we will do. This is what we do. And we're gonna reevaluate once a quarter because I don't know what they do now. I think a bunch of guys like from the Wall Street Journal get together in a boardroom with like pretzels or something, and they come up with whatever they're gonna do.
Yeah.
And they do a really shitty job of it. I might add, respectfully to those.
Total dictatorship. They have such a loose mandate. They do whatever they want.
But once a quarter, hold on, Strazza, hold on. But once a quarter, when we do get together. And our board, which our board consists of JC and Strazza.
Yeah.
Our board, when we get together, we'll throw it out there. We'll crowdsource ideas.
Wait a second.
Chances are we're going to ignore them all. But we do have a very strong audience, a smart audience. So it would behoove us, Strazza, to consider some of these ideas. Right?
I'm ashamed that I did not think of what Ravi just dropped in the chat.
What?
It's the Strazza Parets. It's the S&P. It's the S&P Industrial Average. I'm ashamed.
Robbie.
I'm ashamed that none of us thought of that.
Somebody's thinking.
Oh man.
There's no one I would rather have create a new index than you and I, JC. So this is going to be a complete and total dictatorship. We are picking these stocks. We know what's going to go. And you know what? We're not going to have to revise it every quarter. I'll tell you why. Because we're going to pick good stocks. We're going to pick secular leaders. And we're not going to want to take them out.
Yeah, fine. That's not the point. We don't have to make any changes. We're just going to reevaluate.
Right. Sure. Fine.
And we'll let other people weigh in. Be like, how do you guys think? There's going to be people. People have opinions, Strazza. I don't know if you've noticed. People have opinions. And we will take those opinions. And then we will decide whether those opinions are worth our attention or not.
At first we were thinking
even Spencer might have an idea. He might even have a good idea. Who knows?
Crazy thought. So at first we were thinking, you know what? We'll use the traditional Dow index and then we'll just create like a brand new index of 30 stocks. And then like we were talking yesterday, I've come around. I like this idea. Now we're just going to say, you know what? The old index is just in such bad shape. We're just going to totally revise it. Kick out the ones that don't belong there. Obviously,
we're not going to kick out Apple.
Right. And then plug in, to the whole.
We're going to give it a bigger energy weighting though. So there's only one energy stock, Chevron. So we're going to add Exxon back, and we're bringing the Schlumberger.
It's going to have more tech too. I'm telling you. I mean, I know that we pick on indexes like the S&P and Nasdaq for having too much tech, but that's why they're outperformers. That's why.
But we're bringing in Google, which is not tech; it's communications. We're bringing in Amazon, which is consumer discretionary.
So we're saying the same thing. We're bringing in tech. Yeah,
but those are not tech stocks.
Yeah, they are.
Oh, yes, they are. Come on.
They absolutely are not tech stocks. None of those stocks, they have a 0 weighting in the tech index. Zero.
Somehow saying the same thing.
Jesse, you want arbitrary? That's arbitrary.
Yeah.
The S&P, the GICS committee, whoever they are, just decides what is and isn't technology. That's arbitrary.
Okay.
And they do such a bad job at it at this point. JC's always like, what is this? PayPal, is this a tech company or financial? I don't even know. Like, I know what it is to me. I don't know.
I think it's a capital market stock now.
Like home builders are discretionary stocks. They're industrials to me. They're industrials, but we can treat them as discretionary. I get it. It's a consumer facing business.
Are they industrials?
They're building houses. They're building houses.
Yeah, but they're building automobiles, so automakers are industrials too. What's the difference?
Yeah.
They're not. It's consumer discretionary. Listen, we could probably argue that like everything's an industrial stock or like everything's a tech stock. You know what I mean? Like,
yeah, probably.
If you have a website, you're a tech stock. Boom, that's everyone.
Right,
done.
exactly.
I just solved the problem. All right.
So Berkshire Hathaway is not a tech stock.
Yeah, maybe they're the one. Well, they have a website. It just looks basic.
That website is so good. It's so good. It's so good.
It
looks
is
like the GeoCities, like back in the 90s.
It is if you haven't ever been on the Berkshire Hathaway website, I recommend you check it out. It is the best website on the internet.
Guys,
pretty awesome.
fun fact, I'm going to be sending I'm going to be driving everybody crazy in the chat tomorrow morning when I do my chart review. It's going to be worst week since. And I'm just going to be dropping stats because everywhere, like all these different groups of indexes.
Save it for Monday, man. Yeah.
Worst week since. And then also the Russell 2000. How many days has it been up this month? There's been 18 days, 18 calendar days.
Well, yes, but there's been what, 12?
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trading days.
Okay.
How many days has the Russell 2000 been up?
Out of
Don't
14,
go count, JC. I see your eyes.
No, I'm not counting anything. I was going to say 3.
Out of 14. Oh, man. I was going to say much higher than that. I don't know. I was going to say like not 8 or 9. I don't know.
You're both way too high.
How many?
2. The character of the market has changed. I mean, we had Frank on the other day talking about how these indexes are closing on the lows. Look at the last 3 candles before today. Closing on the lows, big red solid candles, closing on the lows. Like I said, ARC, 9 consecutive down days earlier this month. The consecutive down day readings are like off the charts in a lot of these indexes right now. Also, this is the worst week since March for a lot of stock indexes and November for many others. Like the character of this corrective action is getting a little bit more intense here. For sure.
Well, I will tell you that the selling got to financials and industrials, which is not anything that we had seen in quite some time. Now, granted, financials and industrials are at some key support levels, potential support levels. Let's see if the market reacts.
It's hitting everything. Throw up chart 10. Things are getting oversold for the first time. I would imagine SPY and Qs get oversold here today. SPY's just barely staying out of oversold territory. If you look at the futures, we're pretty much there, though. NASDAQ as well. Throw up chart 10.
I'm doing it.
So this is the definition of a mess. And this is what a lot of things are starting to look like now, because a lot of the bases that did break out are getting undone now based on the past few weeks of selling. But look at the Russell. Really never got out of its own way. It's been a trendless mess for going on 2 years now. Look at how it's been overbought and then oversold on corrections. Overbought and then oversold on corrections. And we're getting oversold here again today. During corrective phases like this, you want to look to the laggards. You want to look to the weakest groups and indexes like the Russell 2000 because they're going to give you that heads up. And boy, has the Russell been super weak. Leading to the downside here, we just talked about only positive 2 days this month. Printing an oversold reading. I think that's where the other indexes are headed. And like we were talking about with Christian, it's time to start identifying some downside levels and some potential support zones to kind of figure out where the market's going to find its footing. Because for now, it looks like the selling is still picking up momentum.
It feels like it kind of just started. It just started. It feels like
it was a little like stealth and under the surface, I think, in the beginning, and it really picked up earlier this week. Throw up the ARC chart too, Spencer, because I know I've referenced it.
Yeah, remember the new highs list peaked over a month ago, so this has been happening underneath the surface now for quite some time. Yeah. So this is not really anything new. We're probably towards the I don't want to say we're towards the end of the selling, but I think
that's what you just said. I heard it.
I don't necessarily think that it's the end of the messy market, but what could be in the lower ends of the range easily.
I think these oversold readings are no good, and you don't want to see something like XLK register an oversold reading here.
It just means means messy for longer. Stock market's not supposed to do well till October, November, and we're in August. So get comfortable.
No, but look, the NASDAQ and tech, they're supposed to be out of their messes. They completed bases. A lot of their components have taken out their all-time highs. They're supposed to be behind with the mess behind them.
The Qs and the XLK are stuck below overhead supply from the prior cycle's highs. What do you mean?
Bases are complete in something like XLK.
Not at the index level, though. At the individual stock level, yes. Some industry groups, for sure. But not at the index level.
No. The base is the reversal pattern, in my opinion.
But what about the XLK? What about the XLK?
What about the XLK? Yeah,
we ran into the former highs from the prior cycle's peak and failed.
Right, but the base that broke out at the August highs is still very much intact.
Agreed, but we're still below overhead supply. It's going to take time. Same thing with the Qs. Same thing with the SPYs. It's going to take time. Be patient.
Yeah.
I don't think it's going to happen anytime soon. You think we're going to break out anytime soon?
Listen, we had a really clean rally phase after these reversal patterns broke out in May and June. And this is just a much steeper correction than you would have expected based on those textbook reversals. You got a nice
fine, but at the index level, there's so much overhead supply. It's going to take time. I think it's going to take time, months, maybe longer.
I don't know. It's not constructive to see an oversold reading, though. Still,
agreed 100%. I'm with you. There's nothing constructive about any of these things. But yes, right. I'm with you.
The most speculative stocks are getting absolutely thrown out right now. This is just pull up a chart of ARK. I mean, zoom in. It's nasty. It's pretty nasty.
Because everybody thinks that bonds are going to crash. I'm telling you, there's something funky going on in the bond market. Can we bring in an Ian Colley, please? Can we bring him in?
I want to get a third opinion on this.
Even think he's got the afro going or the Rico Suave look?
Even worse than the Russell 2000, ARK is only up 1 day this month. Ugh.
All right, Ian Colley, head of fixed income, commodities, and currencies at All Star Charts. He's here. Let's get him on the show.
ARK is out here.
What's happening, guys?
Making Chinese tech stocks look good.
Ian Colley's intro, I think, is the best one.
Yeah. Ian, you look clean and tidy today. You're looking good. You look like a true professional.
I got a doctor's appointment later.
I knew it.
Is she good looking?
He's leaving his office.
No, he's not, but he's a nice guy.
All right.
But hey, what's wrong with a lot of these base breakouts simply being retested? Speaking to all these the tech and growth areas of the market,
that would be fine. But a lot of them are getting absolutely blasted. Like if you look at something like software,
are you seeing a lot of them? Are you seeing a lot of those breakouts fail?
Yeah, a lot of these bases are actually coming undone now. Look at ARKF. Look at XSW, equal weight software, internet.
So the argument is that at the index level, we're not seeing that this is the same level of deterioration. They're just stuck beneath overhead supply.
We'll have to do more work this weekend as to the actual components. Like we have that scan that we run, that stat about how many have completed bases based on our 4 criteria. I'll have to see how that's deteriorated because when I was in Asia, more than 50% of components, so the majority of components beneath the surface, had checked all the boxes for our reversal pattern criteria. Which told us then that the majority of stocks are in new uptrends. And now we're going to have to go back and say, okay, how has that number changed? Because I guarantee it's not the majority anymore. How bad is it, though? We'll find out.
It's almost like the growth areas of the market are responding to a potential, fresh leg higher in rates.
It's almost like growth stocks just found out rates are heading higher and staying up there for longer.
Yeah.
Ian Colley flipped the book long bonds here.
I don't see any reason to. That's the thing.
I know you don't. I know you don't, and nobody else seems to either. By the way,
right? And when it comes to interest rates, just kind of try to keep it simple. The underlying uptrend remains higher, and I just haven't seen any signs or any kind of evidence of a potential reversal. So I just got to err in the direction of the underlying trend. So for bonds,
I've got no bond position on. I'm itching to get long the bonds. Ian, you know me, bro.
It's gonna happen. It's gonna happen, JC.
You know me. I like being lonely in my positioning. I don't like it when everybody around me agrees that what I'm doing is a good idea. I like it when people tell me how crazy I am and how dumb I am and like all those things. Like remember last fall, how everybody in the world is telling me how stupid I am. Even like our own colleagues, like CMTs, like professionals that manage assets or whatever bullshit, are telling me how stupid I am for fighting trends. Meanwhile, they missed one of the greatest rallies of all time. Now, like a month ago, now they're like, oh, maybe this is a bull market. Now they're getting steamrolled, right? So I like being lonely. I like it when people tell me how dumb I am. And I'm not long bonds, but if I were to buy bonds, my suspicion is I'm going to have a slew of people telling me what an idiot I am.
Oh, guaranteed.
And that's going to make me feel pretty good. So I don't know. I got no positions on right now. in the bond market. But man, there's a magazine cover coming soon. There's a nasty mean reversion coming soon. I can smell it, Ian. I can smell it.
I think if we witness a reversal candle, like on a weekly chart down here, maybe, if the risk is really well defined, take a swing.
But we haven't even broken out in rates. We haven't even broken out above the last year's highs.
We have in the 10 and we have in the 30-year. We haven't yet in the 5-year.
And by we have what, 1 day close above it?
Well, yeah. I mean, 1 day close.
Is that a breakout?
Well, I mean, it's closed above it in both the 30.
What if it doesn't today and we're back below it today? What happens then?
I mean, breakout. Is there a percentage rule for the breakout? Was it Edwards and McGee had a 3% rule for stocks?
Listen, everybody's got a rule: 2 consecutive closes, a weekly close, 3% rule. Everybody's got a different rule. The market don't give a damn about your rules. Let's just remember that. So let's just talk about between me and you. Forget the rules. This is Nam for a second.
Well, let's just
say today it closes back below those former highs from last year. Then you can't say it's a breakout.
Well, the breakdown in the 30-year T-bonds that's significant in my book. I mean, that's on its way to retest the 2022 lows, last year's lows.
Just reverse.
It hit an oversold reading at the beginning of the month, and it hit another oversold reading yesterday on the 14-day RSI. So, I mean, I think that's a breakdown. If we want to switch from yields to the actual bonds themselves, what we're trading, I mean, I think that's a significant breakdown. We'll see if the 10-year holds. We'll see if we even get a breakout in the 5-year. Maybe we don't.
Sure
Maybe that's what we need to be paying attention to. Does the 5-year?
I'm pretty sure I'm buying bonds today. I'm pretty sure I'm buying bonds today before it closes.
I think you're crazy.
I know you do. So does everybody else.
The risk to the downside for bonds. Ian and I were talking about this yesterday. Fed funds futures are not pricing in another rate hike. They're pricing in the market being done. If rates are resolving higher from these ranges, they're telling us the Fed is not done. Then the market has to adjust its expectations, say, okay, we are in for more hikes in the future, and you're going to see the whole curve rip-roar higher.
Fortunately, I don't give a damn what the Fed thinks or what they might do or might not do. I'm here to make money in the market. And all I know is every time I say that I think we should be buying bonds, everybody thinks I'm crazy, yourselves included.
I'm with you 100%, JC. The only thing is I focus on price, right? And
what do I focus on?
I look at a price chart of bonds.
What do I focus on?
Find a reason to buy bonds.
Tell them, Ian. You sound like
can't find a reason.
I have an exercise.
And that doesn't mean they won't rip higher.
Stop. I have an exercise. I've been wanting to do this. Spencer, throw up chart 1, both of you guys, and chat. I want the chat, everybody to participate. This is today's mystery chart. Okay, I'm going to take a chart. I'm going to strip out whatever axes I want to strip out. Maybe I'll include some to help you guys out. I can invert the chart. I could use custom indexes, but I'm not going to do that. It's going to be something recognizable. Anybody can guess this. Guys, do you buy or sell this chart? And what is it?
I sell it here.
That's the 30-year yield, right?
I sell it with a tight stop. Easy trade.
He knows what it is, then that's why he's saying this.
Yeah, what?
He knows what it is. You're such a prick. All right, Ian, you buying or selling this chart?
I mean, I'm buying it on a breakout. Yeah, absolutely. I mean, I buy smiley faces, sell frowny faces. I learned that from a very wise man, and
All right,
that's how I see it.
Brian Hunter nailed it. Hey, and listen, they're not always going to be this easy. For the first mystery chart ever, I thought I'd make an easy one. This is TLT upside down.
TLT, yeah.
This is a chart that we buy on a breakout. Okay. JC's sitting here saying he wants to sell this chart or short this chart. Fine. But I mean, that's just, you sound different than you normally do looking at a structure like this.
Well, we're in a different market environment.
It's that positioning.
It's the COT data.
It's the COT data. I know.
It's not just the COT data. I'm literally entering the order to buy bonds as we speak.
Hey, JC, do you normally weigh COT data more than price in your analysis, or is that something new that you just started doing?
I guess we're going to see who's laughing. All right. You guys laugh away. Laugh away. That's okay. Laugh all you want.
Play it with TMF, says the real junkie in the chat. Isn't that like a triple levered inverse? Yeah. Jesus.
No.
3x bull shares, 20-year levered treasury funds. Sick. All right.
That's not really how I roll. I'm telling you right now, man.
JC's buying TLT calls.
Is that the trade though? TLT calls, or do you go with the IEF? I'm thinking IEF.
No, go with the long bonds.
Yeah.
Go with the long bonds. I'll move more. TLT calls. I'll bet they're cheap right now too.
I mean, hey, it could work.
So expensive.
It could work.
I just. Oh, what about the rest of the FIC market? Anything else stand out here?
You guys have been talking about it. Just the fact that credit spreads aren't widening; they're actually contracting. So as we see this pullback, in stocks, mainly at the index level, growth areas, there's no signs of stress in the largest market in the world, in the bond market. So
how about
it just seems like just a healthy digestion of recent gains.
What's going on with currencies, Ian? How about there? How about this failed breakout?
I think the dollar, if the dollar can take out those pivot highs from July, I think it keeps running. I think it keeps running, and looking at a number of other major global currencies, there's a lot of potential breakouts, a lot of big levels being tested right now. Aussie breaking down, printing fresh lows versus the dollar. Kiwi breaking down, dollar yen breaking out, euro 108 handle, pound back around 127.50.
Yeah.
So I mean, I think we could get a dollar rally. We could see it.
How you mentioned a lot of crosses here. I didn't hear you mention throw up chart 1. How about this potential failed breakout in dollar dong? You watching that?
Dollar what?
You're the only person in the world who gives a shit about the dollar dong.
The dollar dong.
Oh. There
Excuse
it is.
my ugly chart.
Yeah, actually,
hard to get this data, guys. It's not easy to get this data.
Well,
I have this chart too.
This is
and I only started looking at it. Yeah, I only started looking at this chart when you were over there. Actually, the dollar looks really good against Asian currencies.
What else is new?
Right. But I mean, we see a lot of similar basing formations in the Korean won, in the Singapore dollar, even in the Malaysian, was it ringgit? Did I say that right?
Ringgit, yeah.
Ringgit, yeah.
Yep.
So yeah, I mean, we'll see.
All right. I started dipping my toe in, started buying some bonds.
What did you buy?
I bought the TLT 95 calls.
Okay. How far did you go out?
January.
Okay.
5 months. Is that enough?
Move a dollar?
Oh, yeah, I think that's enough.
What?
If bonds could break down and continue to track lower, and that trade could still work out.
Where's your
my toe in a little bit? See how it feels?
Have some conviction, like buy the hundreds at least. Go more than a dollar out of
no, that's a big level.
Why don't you worry about your own portfolio? Why don't you worry about your own portfolio and let me worry about what I need to do? I don't want to go out to 100. I'd rather be closer to the. Yeah. Why does it have to? Why can't I put on a more conservative bet?
Just buy the fund.
Why does it have to be 100 calls?
I don't know. Just buy the fund itself. You're not getting much juice there. Is all I'm saying.
I'm getting enough juice. All right. Listen.
Don't worry about JC's juice.
Don't worry about my juice. I got enough. I got more juice than I need, probably. All right. So relax. All right. I'm good. And it's not a position that's going to change my life or anything like that. Not yet. But we come in hot next week. Daddy starts adding to positions. Just saying. Sure. People think I'm crazy. And when everybody agrees with me, man, like I remember I'm having lunch with Tom Lee a month ago almost, right? Like 3-4 weeks ago. I'm having lunch. We're having omakase, and I'm like, yo. And like it's not like him and I are such good friends. It was actually the first time I ever met him. And I'm sitting there, I was like, yo, you and I are getting a lot of compliments these days. Like a lot. Like people were calling him like the king, everybody's tweeting at me, JC, you were right all along, blah, 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 blah. Everybody's telling me and Tom Lee how great we are. And I'm like, it's a lot of compliments, man. I'm not that smart and neither are you. So we got this one right. Everybody thinks we're a genius. Probably start laying out some shorts, probably start raising some cash. Like literally we were having, he's cracking up. And he's like, he didn't say this at the time, but he gave me that look like, motherfucker, you're stealing my strategy. Like, like this is already something he's been doing for a while. He just doesn't like to talk about it. Like he didn't say, man, you're stealing my, my secret sauce, right? But he gave me that look like I'm right on the money. Like he notices these things too, right? Like when everybody hates him, like he's probably onto something. It's probably very similar to me, It's funny.
Yeah, he's very bullish and he's been right. Bernie,
here we are.
Shout out.
Here we are. You guys think I'm crazy. My friends and colleagues think I'm nuts. Perfect.
What was it like back in 2018 when you were buying bonds? Because I know that was a great trade for you. Was everyone all bared up on bonds back then too?
It was they didn't really nobody cared about bonds. Is really what it was. Right? Nobody cared about bonds. They were all bulled up on the equities market. Is really what it was. And we were super bearish. In fact, the only reason I bought bonds, this is the fourth quarter of 18. The only reason I bought bonds, I didn't short any. As bearish as I was in the fourth quarter, I actually didn't short anything. The trade was I bought bonds. I did the same thing right before COVID. As bearish as we were equities in January, February, right before COVID, not that we had any idea that COVID was coming. Otherwise, I probably would have shorted stocks. I bought bonds. I remember being in Miami Beach. I was at Nikki Beach and doing their buffet on a Sunday. If you're ever down in Miami on a Sunday, go to Nikki Beach, do their sushi buffet situation. And I remember waiting for the market to open because I had such a big bond position. I had a couple of drinks in me. I was very excited. I didn't know what the disaster was coming. It was like February. It was right. It had already started technically, I guess, COVID. But back then, those two short market positions were actually long bonds. But we're in a much different environment right now. The bond market is just not acting as that safe haven like it did then. So I wouldn't do that today.
Right. I think that's a big question. Are we gonna see a repeat of last year? Are we gonna see dollar and rates continue to rise together?
We're going to talk about this more today on What the Fig. Ready, Ian? Because we have Bill Baruch joining us from Blue Line Futures. So that's very excited to talk to Bill. That'll be at 11:30 a.m. Eastern Time right here on the channel. So stay tuned for that. You want to do some quick recess?
Recess.
We'll hop
Let's
off?
go.
All right.
Ian Colley, you are a father of three, a fourth on the way?
I got one on the way.
On the way. So you'll appreciate this for all the dads out there. Check out my new Thule. Very, very excited. Look at slide one. Catch up slide one there, Spencer. Show the folks. Right. I don't know, Ian. Do you have these dad moments? Because Spencer and Strazza, they don't know. But for you have these dad moments where I shouldn't be this excited. I shouldn't be this excited about a box for the roof of my car. But I am very excited about my new Thule. I got it installed yesterday, so I'm new to this.
So are you going to keep that on top all the time?
No, because you have issues in parking garages, and my wife says it looks ugly. So it's easy to take off. It doesn't weigh anything. It's like featherweight. It's crazy.
Nice.
I'm telling you, man, the Thule. Free installation at LL Bean, by the way. I didn't even buy it at LL Bean.
Nice. Our trunk in our station wagon is always just completely packed out.
So is mine.
Constantly.
In the SUV.
Yeah.
You can't even see behind you. It's unacceptable. No more. So I talked to my homie in Brooklyn, and he's like, dude, you got to get the Thule. Get the biggest one you can get. I'm like, okay. And then I got it. And he also told me that I can install it in myself, which, no. It's like a zillion pieces.
Yeah.
All right, I'm happy for you, JC. My quick recess. I know JC's going out of town this weekend, but I'm heading to JC's neck of the woods tonight. I'm going to see the Lehigh Valley Iron Pigs against the Jacksonville Jumbo Shrimp. Hot AAA baseball matchup. Very excited to see that.
Outstanding.
The Iron Pigs, they got a guy who's the pitcher. I forgot his name. He pumps mid-90s. He's kind of recovering from an injury.
Maybe I'll see him tonight. two of the best minor league baseball names in existence:
That's right.
the Jumbo Shrimp and the Iron Pigs.
That's right.
It's going to be hot.
That's right. What? Whose
about you,
phone
Shaz?
keeps ringing? It sounds like a dentist office.
It's the Ring alarm system in the office. I'm sorry. I can't. I don't know how to turn it off.
These alarms, they're
These people
trouble,
keep
guys.
coming. Yeah, I'm.
These alarms.
Dude, if that was my office, I would rip that thing out of the ceiling. I would maybe get a gun and shoot it. I don't even know. It would drive me crazy.
I ripped mine off the walls.
Is that aggressive? Is that aggressive?
I don't know.
I don't even own a
Pretty
gun.
annoying. It's pretty annoying.
I just got a new Cobra King putter. JC, you'll appreciate this. I told you how I needed a new putter.
Yeah.
Took it out for the first time yesterday. 2 birdies, both par 3s, but still 2 birdies. That's
Wow.
I'm not a
Okay.
2 birdie guy. Beginner's luck, I think, with the new putter. But
Hold
still,
on, Strazza. Real question, real life question. No joke. Who's a worse putter, you or me?
on those greens, I was. We're both pretty bad. You know, I was joking with JC, like, putting, I'm just not at the point in my game where I care about putting. It's so boring. Like, hitting the ball is fun. And then I get to the green and I'm just like, fuck this. But I know that once I get good enough at golf, I'm going to care about the putting and get better at it then. I think I'm pretty much there. I'm fighting it a little bit. But no, we were both 3 and 4 putting a lot.
We had some 4 putts. That's right. We had a lot of 3 putts, a few 4 putts when we were lucky, you know.
Yeah.
It was ugly out
stuff.
there.
All right.
It was ugly.
Strazza, we're doing a hot corner today?
We sure are. I think it's noon.
All right, that's at noon. So what the fick with Ian, me, and Bill Baruch at 11:30. Hot corner right after that at noon. That'll be it for the day. Thanks to our guest today, Christian Tharp. Remember, if you want to attend the live event on Tuesday, 4 p.m. Eastern, with Christian and JC, the link to that is in the description of this video on YouTube. It's also in the chat if you just scroll up to find it. Thanks to Christian. Thanks to Ian. Thanks to Kimmy. Everyone, if I don't see you, have a great weekend, but I will see you in a couple hours for What the Fix. So market's open. Go make some money. Catch you guys in a little bit.
Going to Boston. Adios.
See you guys.
Run it. I can't take no loss. I don't need no